Happy New Year, everyone. It is 8:01 a.m. Chicago time on Tuesday, the 2nd of January, 2024. I have to practice saying 2024 going forward. Uh, this is episode number 2598. We were 3 episodes short of closing the year at 2600 episodes. Um, but, it's all good. Um, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. You may notice pauses in the way that I'm speaking. My brain is running on sludge. It feels like very poor sleep last night, um, unfortunately. So I got to take it easy today after having done so much homework yesterday and prep for today. I'm probably not going to be able to use it. So it is what it is. Okay, so let's take a look at the pre-market summary sheet from Convergent Trading this morning. We have clearly risk-off sentiment coming into the session. The S&P is recovering a little bit, but is down 77 basis points, 38 points. We've had pretty good range in the S&P, as you can see there in the blue right here in our stats box at 15 a quarter points so far. The Nasdaq's down 1%, the Russell down 0.75%. Russell seeing some pretty heavy sellers this morning. We'll look at that for a minute. The Dow's off 228 points from Friday's settlement, and then it looks like the DAX and Eurostox 50 aren't doing as bad as the US is. We do have a pretty good pop in crude. We're seeing over 5% pop higher in natural gas. Gold mostly sideways. Mostly sideways. So silver. And then we're seeing the treasury selling now. Remember, treasury selling yields higher. Um, so the reaction by the market is generally going to be in this environment, in an interest rate based environment, um, the market's going to respond negatively to that. So that's where we are. We're seeing quite a bit of movement in the forex pairs. The dollar's up 81 basis points, which is pretty decent pop. The euro falling below $1.10, and the cable falling below $1.27, and we're seeing a pop in Bitcoin with that ETF slated to be approved by the SEC here shortly. Um, the the S&P overall. What are the overall themes? There really isn't much. Scouring around, there really isn't all that much to talk about. Wow, I'm broadcasting in 4K. I guess I was fooling around with some settings and I never set it back. How's the image to you? Is it clear? Yeah, it's killing my bandwidth since I'm at home and I don't have the gig fiber at home. It's causing a lot of dropped frames. Um, yeah, unfortunately, I didn't see that till just now. Um, So, what are the themes this morning pushing things around? Chinese MBS PMIs came in weak for December. Caixin manufacturing PMI beat slightly. The big thing is Tesla reported higher Q4 deliveries than estimated. The yearly number was slightly below. I think it was expected at 1.82. Let me verify. I don't want to spit something out. Yes, expected at 1.82 million Tesla units versus 1.81 actually delivered. So pretty decent. Um, Not sure what the stock is doing. Let's have a look. See. Let's see here. Watch list. Yes. Tesla popping a little bit higher this morning. Um, yeah, so that's that. Um, what do we expect on the calendar? Really, not all that much today. The French have a an auction, 3, 6, and 12 month. A U.S. S&P Global Manufacturing PMI, but this is final, so it's not really a pusher. Um, at 9:45, it's 15 minutes after the open, and then we're looking for construction spending for November. This is a stale number here. November is just a very low importance. At 10 and at 11:30, we're looking for a 3 and 6 month bill auction. So relatively on the news front, relatively quiet day, but on the action in terms of price action and the order flow this morning, pretty good action so far. 249,000 contracts traded, pretty good, pretty solid volume for the overnight session. We're not even done yet. The inventory is somewhat balanced against the prior close. Range is excellent this morning. We have really good range. And then the point of control is down at 48.21. Is at 48.21 for the overnight session, which is basically Friday's settlement. Note that the rotation and range stats have been updated. Not too much to consider. Rotations went down a little bit in the NQ. Everything else is stable. Nothing really special to see there. Let's take a look at the technical picture here. Here's what the S&P looks like currently in the on the short-term chart. We opened right up against the settlement up here. This is settlement. This is your settlement line. We opened right up against it. We tested higher. We pushed all the way into the IB low of Friday before it sold off. And then from there, it's just been selling. And you can see the selling was pretty aggressive. You can see those bubbles all the way through, those dots all the way through. So relatively aggressive selling. And then what we have now is a relatively weak low. So we have an impulse, double impulse, continued impulse, and then a continuation, which turned into an impulse, and now we're sitting sideways expecting another leg down on this. Really big separation between VWAP mid and the current price action, and of course the overnight point of control. And what that tells me is we are just completely out of balance here, which spells opportunity, right? This creates opportunities for the session. So overall, the tick flow, as you can see here, the tick flow and the flow of volume coming through is starting to pop a little bit, but overall, pretty measured session. NQ, same story, pretty blunt low. You can see there was a fight right up against the stock zone that we have down at 6,822, 16,822, and it's taking a bounce. And if it breaks above here, the 16,880, we're likely to see some shorts get squeezed, short-term shorts get squeezed. But the NQ is exhibiting the same characteristics. The overnight point of control remaining at the top, so out of balance. We are way off of our VWAP and mid. So the expectation is a very quick, relatively quick and aggressive adjustment right at the open. Remember, it's the first trading day of the year, and those who have cash, and many will, because of tax loss harvesting, are going to look to deploy that cash today. So I wouldn't be too surprised if we find ourselves moving right back up the price scale as we come in. Looking at the RTY, look at that RTY, absolutely getting pounded by 250 lots. These are 250 lots back to back to back to back to back to back, and still selling, still selling. Very active, very large seller. You can see the yellow line here for very large lots, just dipping and dipping and dipping and dipping and dipping. Just seems like a rotation out of small caps in large volume here, or some sort of a hedge. But in either case, it's a bullish look coming into the small caps today, represented by the RTY. RTY has shifted its point of control down because it's traded quite a bit down here. And it's right on top of its point of control. But the profile's multi-distribution, pretty active price discovery, and it's out of balance with the VWAP. Currently in balance with its overnight point of control. So a different situation from the other indices. Let me move the RTY over so I'm covering indices together. This is crude. Crude climbed back up in the overnight session here, and as soon as it opened, it's correcting its inventory. It was long, 100% long inventory coming into today's session, and as soon as we opened, we pushed down. So crude opened at about 73.51, pushed to 73.55, so 4 ticks, and then it has what looks like an open drive. Open drive down, has an open drive down, but it's not getting too far away from its VWAP right here. It tagged it, and it's tagging it again. Crude has a pretty big short position by some big players, commercials, things like that. So it's kind of due for a pop. Let's take a look at the bigger picture here. This is the S&P. So we had that big break higher on the 13th, finished very strong. Let me thicken up this pen here because of this higher resolution. So you can see we opened down here and we finished higher. Next day we gapped up, tested both sides, finished in the middle. Balance inside day on the 15th. Then comes the 18th, where we open right outside of the range. Right outside of the range. We don't even bother to close the tiny little gap. We push to new highs, and then we finish pretty bullish. The next day, we open in a gap again, test up, get to 48.30, and boom, we explode to the downside with poor structure right through the century figure between 47.80 and 48.10. Pretty poor structure there. And then we open inside of the range. The following day, December 21st, test down, and we end up going neutral and running up on the end of the session. The next day we gap open, we check up almost to the prior point of control of this big selling day. So we've refuted the selling day after an inside day. This is quite bullish setup here. And then we end up selling off back into the range. We get the value high. You can see value high here. Finish right in the middle. Okay. And then the next day we open from the middle. We tag the point of control. And then we make a new high. And we continue to do this while I was gone. Open in the middle, tag a new high. Open in the middle, tag a new high. Finish in the middle. And then finally, on Friday, we open below the point of control. We test the point of control, and then we break down. But then later in the session, we come all the way back above the 4800 century figure. We push through the century figure by 3 points, 3.25 points, but we finish pretty good, 48.20. So we finish what is a banner year. The S&P for the year up 23%. 23%, which is pretty outstanding performance for the index, given that everybody, I mean everybody, talked about how the recession is upon us, and it's, look out below, that type of thing. So pretty awesome Santa Claus rally. And then what we're doing currently is we're correcting that. So, given this high, given an attempt to push higher and to regain this highest distribution, a completely balanced day up here, we attempted to regain that, and as soon as we failed, it became more of a drive. So as soon as we took out the low of the prior session Thursday, it pretty much drove down. But at the end of the day on Friday, it did catch a bid, so it came right back in. Where are we in the overall picture? So this is what I just narrated from December 14th all the way through to today. I've compressed all of these profiles together so we can see where we are. The first thing we observe is the volume profile shows pretty active price discovery. This is kind of typical of a one-way market, or a market that's just hasn't found a satisfactory top. This is what it's saying currently. Now we finished at 48.20 up here, but the point of control for volume is down here in the 47, 67, 68 area, right down here. So let's flag that up, 68, something like that. We're currently at 84, and the low on Friday was 96. So up here is Friday's low, 96.75, something like that. So what this is showing me is we have an upper distribution and we have a lower distribution. This kind of nubbin kind of throws things off here a little bit. Should we put a cigarette on this guy too? Yep, there's your cigarette. There's his nose. So two distributions here. And what we're doing is we've breached through the 4,800. We've breached through the 4,800 and then are in the lower distribution. So to me, any downside push is going to most likely target 68 to 64 area. This was a kind of a fought over early area. Before we have the point of control, we have a close from here, and we've kind of battled this 64, 65 area before. This becomes the key downside target. If we push through to the upside, which it can easily do, we're talking about Friday's low being approximately 12 points up. If we regain that territory, then 4,800 is very likely in the cards, and of course back to settlement, and we regain some of the losses we took in the overnight session. This is a pretty high probability outcome for today. Okay, coming into the session, there's a pretty decent chance that bargain hunters are looking to buy on the way in. I'm not saying we should be bullish. I'm not saying we should be bearish. To me, we're in the middle of a double distribution, so I can make an argument for either one. So I'm really neutral biased. Despite what the overnight session has done, I'm neutral biased on the overall session. But the key areas to pay attention to, of course, are this 68, 68, 64, and if it takes out the 96.75, it's very likely to push its way through 4,800. Just becomes too attractive to get through the 4,800 and then back to 48.20 where we settled. And then the next setup for the next day, if it ends up here, is to regain the upper distribution up here and to squeeze new all-time highs. That's what would set up in that case. If we don't, if we were open at, in the 84, 80 area, and we start to push higher and find overhead resistance, whether it's 96 or before that, somewhere in the mid 90s, I would guess, and it starts to turn down and take out the overnight low at 77, then you're looking for 68, 64, and then that puts the low of this region here the 46 on deck. And as soon as we get the 46, look at what's beneath it. Very poor structure. Very poor structure right back to 4,700. This is likely to be, if this happens, this is likely to be a very precipitous fall, very quick fall. The market is very heavy on the buy side right now, and it's likely to squeeze people out. We see that we have pretty poor structure. So another way to look at this is this chart. So if we look at the, so this blue line here, this cyan line, is the monthly VWAP. It starts on the first of the month and it goes, and there's quite a bit of separation between where volume has traded and where price is throughout the month. There's a big disparity there. We saw that in November as well, but we rested a little bit and then we continued. It just it's kind of a very rule of thumbish view on how the market's tilted, and you could see this is the case with the YM, this is the case with the NQ, this is the case with the Russell, although the Russell is more aggressively down. The same thing in Treasuries, the 10-year and the bonds. The bonds and the 10-year are hugging their VWAPs so far this session. So to me, the downside play is can be pretty hefty from where we stand. Let's go back to where we are now. So what are we looking at? So there's that 96.75. This is a pretty easy area for the market to regain here. Okay, so we're seeing an uptick in buying. To me, this is just the perfect day. You want to start the year by being more of an observer than someone who's taking action, in my opinion. It's really important because this is like trading the open, the very open of the day. You're trading the open of the year. It is smart to just let the first bracket or two set up. What does that mean? Each bracket is 30 minutes. 30 minutes. Each TPO is 30 minutes. So we're going to wait 60 minutes for this thing to set itself up. Sure, might miss a big run up of 15 points or whatever it is, back to full session VWAP or whatever. But I would rather do that than find myself acting out of urgency and be on the wrong side of how this thing plays out. This move in the overnight session occurred on okay volume. The structure is very weak here, and so when it starts to push higher, it can find its way up pretty quickly. Okay, and I don't want to be someone who's like looking at this and saying, "Oh my God, this is a gap down. I'm gonna look for a gap and go." So I'm gonna be a seller. It needs to sell for me to be a seller. Okay, it needs to sell for me to be a seller. I need to see another aggressive push down so that I can see the buyers are just not available at the moment before I stake money trying to guess where it's going to sell from. Don't be a guesser. Just wait for the market to tell you. So I'm going to leave you with that. I don't want to run over too much. It's 8:25. But, this is a good day to just, take it easy, chill. It's the beginning of the year. It kind of sets the mood for a lot of people psychologically. So you want to be on your best behavior today. Good luck, and I'll catch you tomorrow morning. Take care.